Hello, hello, everyone. Welcome. We're so excited to have you join us today. We're just going to give a minute or two for everybody to filter in. But while we are waiting, if you want to just pop maybe the name of your organization and where you're located in the chat, we would love to get to know everybody a little bit better. We've got lots of people coming in. That's very good. Welcome if you're just joining. Welcome everybody. Oh, we've got somebody from Sudbury, from Waterloo, from Burlington. Welcome everybody. Lots of friends from Ontario. Oh, we got somebody from Vancouver. Amazing. Charleston, South Carolina. Okay, welcome everybody. We've got people from all over. That's very, very exciting. So we're gonna get started. So first of all, thank you all again so much for taking time out of your busy schedules to be here. My name is Meredith. I'm Kila's head of marketing. We also have Stephanie, our marketing specialist, helping us out today on the tech side of things. So you may see Steph in the chat box or answering some of your technical questions. So feel free to say hello to her. And before we get started, I just want to start the session today by acknowledging that Kila's head office is located in Vancouver, which is on the traditional, ancestral, and unceded territories of the Coast Salish people, the Musqueam, Squamish, and Tsleil-Waututh First Nations, and give thanks for their generosity and hospitality on these lands and waters. If you are new to Kila, welcome. Kila is a fundraiser CRM, meaning that it is designed with the unique needs of fundraisers in mind and aims to unify fundraising, communications, and donor management into one single source of truth. Kila is also a certified B Corp, meaning that we prioritize people over profits, and we are driven by a deep commitment to social and environmental responsibility. And should you have any questions during the presentation today that you would like Celeste to answer, please enter them in either the chat box or in the Q&A section, and we will get to as many as we can towards the end of the presentation. And speaking of the chat box, please remember to select everyone when you type so that all of our guests today can read your comments and questions. And finally, this is probably the question we get the most, the webinar will be recorded and you will get a copy of the recording in your inbox within the next few business days. So before I hand it over to Celeste to kick us off, I want to welcome Catherine, who is here to say a few words on behalf of Imagine Canada.
Thanks, Meredith. Hi, everyone. Thanks for joining today. I'm Catherine, and I'm the lead of data analytics for Imagine Canada's fundraising platform, Grant Connect. I'm really excited that we have Celeste from KCI presenting on the topic of donor-advised funds today. This is something that many in the sector want to understand better, and we at Grant Connect want to contribute to making this data more transparent and accessible. Earlier this year, our team was happy to contribute to KCI's report on donor-advised funds with data from Grant Connect. We recommend giving the report a read. It is a big step in demystifying donor-advised funds for all of us. And if you're not familiar with Grant Connect, we are a cloud database platform that charities and nonprofits use to search for institutional funding opportunities and to easily identify which opportunities align with their own causes. Most of you will know how much time it can take to find quality funding opportunities, and Grant Connect helps with that by offering curated data on well over 11,000 Canadian foundations and hundreds of corporations and government grant programs and other funding sources, including international funders. We on the data team actively track funding opportunities and update this daily with information like deadlines, financial information, and giving history. So I'll be in the chat throughout the presentation if anyone has questions about Grant Connect. And if you want to talk funding data or anything Grant Connect related, feel free to reach out to me at cwang@imaginecanada.ca. Thanks again, and now I'll hand it back over to Meredith.
Thanks, Catherine. So now I am very excited to welcome our expert speaker for today, Celeste Bannon-Waterman. Celeste leads KCI's research and analytics team and compensation benchmarking and council services. With over 13 years working at KCI, Celeste has partnered with organizations of all scope and size, from some of Canada's largest charities to also small grassroots organizations developing their fundraising capacity. So without further ado, I'm going to hand it on over to Celeste.
Okay, thanks so much, Meredith. And a couple shout outs before I leave the screen. Just first of all, I saw a lot of my clients popping on there as the roll call is going along. So hello, everyone. Thank you for joining. And also, I didn't see her, but Sue Lawrenson, who I worked with ages ago and was a mentor to me when I started in the nonprofit space back at the University of Guelph, said she was going to be here. So if you're here, hi, Sue. Okay, with that, let's get to the topic today. So the report that we're going to be talking about today, if you haven't had a chance to look at it, it is available on our website. Feel free to go find it, or the CAGP Foundation website. It was a partnership with CAGP between us. And what we were really trying to do was to get a bit of a handle on what's going on, as you can see here, in donor advised funds in Canada. The report is broken into 3 sections, as you'll see, and I'll talk about today. Influence, which is about really the funds. Affluence, I'm going to talk a little bit about Canadian donors. And then what we're really going to focus on today, and the goal of today's conversation, is to talk about the opportunity that we see for Canadian charities in working with donors who have these types of funds. Okay, so first, I'm actually going to go into the middle piece, which is to talk a little bit about Canadian donors. And I'm not going to get into a lot of detail because this could be a presentation into itself. But really, we have to talk about what's driving this research and the trend that we're seeing with donor giving. And so first of all, just off the top, one of the things that we found when we crunched all these numbers is it's really a small portion of donors in Canada. When I say donors over the context of this in the next slide, I'm talking about a very narrow definition of that. This is donors who claim donations on their tax return. So it's donors who have receipted donations. That is not all donors in Canada because, of course, we give in a variety of ways. We don't always get receipts for the ways that we support charities. There's a whole lot of broad spectrum of support. But with that narrow definition, it's only about 2.4%, we believe, of donors that are using these funds. However, the growth and the amount of money going through them is really growing. Our research in the study focused very closely on the last 3 years because it was really what we were trying to get a handle of, the pre and post, if you will, pandemic period. We found that grants that were coming out of DAFs just from that little 3-year period went up 35%. That's really dramatic. What's really dramatic to me is that when we look at that tax receipted donations that individuals make or claim on their tax return, almost 10% of them in 2021 went into donor advised funds. So you're going to see the data in a minute, but that is really huge. And frankly, it's beginning to explain a little bit of what we've been seeing in that donor data that gets published every year by the Canada Revenue Agency based on tax returns. So if you've seen one of KCI's trends publications in the last, 15 years, you've probably seen a version of this slide where we talk about this theme of fewer donors giving more. And this is really what we've been seeing in the data. So what you're seeing here in that teal line is the proportion of people when they file their taxes who say they made a donation in the previous year. It's been going down each and every year that we've been looking at this data. And this is just over the last 10 years. You can see it went from over 22% of Canadians to down to 18% for the 2021 tax year. That's a real drop. And there's a lot of reasons for that, which isn't just about DAFs. But when you look at the fact that the money claim, though, is going up so dramatically, what's really underneath this is what we're theorizing, and frankly, the DAF data is showing, is increasing number of donors who are making fewer, less often donations, but bigger when they do. So think of it as a big donation into a DAF that then kind of trickles out over time, as opposed to those smaller annual donations that maybe that same donor would have done a few years ago. So let's dig into some of the data around donor advised funds. When we talk about all of this information, I just want to touch on where did we get this information from? It came from a lot of different sources because, we're going to talk about this a couple times in this presentation, there's a real lack of data around these particular types of funds and giving vehicles right now in Canada, which is one of the gaps that we were trying to address. So we looked at a bunch of different data sources. Obviously, charitable tax returns were a key one. We combed through as many tax returns as we could for organizations that hold DAFs. We looked at annual reports and statements, which is really important because some, not all, but some of these foundations do actually report quite broadly with a lot of information over and above what they're required to in terms of disclosure. But where a lot of the data came from is a survey that we did. So we reached out to organizations that hold DAFs, and we frankly asked them to share information with us about the number of funds they have, the amount of assets, the disbursements, a lot of other types of information, a fair bit of qualitative information too about their donors, which was a really important data source. And I want to give a huge thanks if there's anyone on the call today who was at one of those organizations that shared data with us. We couldn't have done it without you. We thank them very sincerely. We also did a lot of interviews. So we interviewed a number of donors. We talked to some charities, so people who work at charities. We talked to some regulators in the space, some financial advisors who work with donors who set up DAFs or perhaps encourage individuals to set up DAFs. We talked to some representatives from DAF foundations. We also did some focus groups that were really helpful to dig in and get a sense of, what is it that donors are looking for. And of course, as Catherine mentioned, Imagine Canada was also a key data source, and you'll see that data coming up just a little bit later in this. So thanks. Thanks again, Catherine and team. So donor advised funds. So just in case anybody hasn't had the chance to go through the experience, or maybe is just kind of at the space of wondering exactly what a donor advised fund is, that's okay. We know that this is relatively new and it's not something everyone has tripped across, but the process by which a fund is set up is, to start with, a donor chooses or works with or is suggested to work with an organization that manages donor advised funds. So you would talk to your community foundation, for example, or maybe a foundation that's aligned with your financial institution or an independent foundation, and you would establish a fund. In that process, you name advisors. So those are the individuals who can advise or suggest where the disbursements from the fund should go. Contribution is made and the donor gets the tax receipt. Then obviously the money gets invested by that foundation until such time as the donor or the advisor, not necessarily the same thing, but a granting recommendation is made, and then the foundation sends the money to a charity recipient. Obviously that process of contribution, receipt, grant recommendation, and grant being sent out is repeated many times once the fund is established. Just some key elements that I think are really important, just to make sure we all understand some key aspects about donor advised funds. First and foremost, one thing to really always remember is the gift is revocable. Once the gift is made, the donation is received by the donor, it is within that foundation, and the foundation or charity that holds the fund has the final decision-making authority and responsibility. So what that means is, while in practice, the advisor or the donor essentially directs the funds, there's still rules and regulations around that. And the foundation, which we'll just use as that term all throughout this presentation, whether it is a foundation or not technically, but the foundation has to make sure it still fits in within the overall regulatory framework and guidelines. And so that is their responsibility. However, while it is true at the granting level that they will pay attention, i.e. the grants can't go to, a non-qualified donee, at least, in most cases, they can't just give it away to a corporation or something like that. In the most part, all those requirements, especially the disclosure requirements, are at the organizational level, not the fund level. So in other words, the disbursement quota that these foundations are required to meet is at the foundation level, not for each and every individual fund. When we talk about funds, there's three main categories. Terminology varies around this, but for the purposes of the report, we broke into really three categories that we did the analysis and most of the commentary on. There's endowed funds. So these are just like what they sound, which is a chunk of money set away, capital maintained in perpetuity, income distributed only. Then there are spend down or flexible funds. These are ones where it's flexible, like it says. So you put a chunk of money in and you have a fair bit of flexibility around when you direct the money to come out and how much in any given year. In theory and generally, the idea is to distribute the funds, but there's no set schedule. There are some organizations that set up specific flow-through funds, which are intended to be temporary and distribute all funds in a fixed period. Those are mostly used when the organization is facilitating a complex gift. So for example, if a community foundation is receiving perhaps gifts of securities on behalf of another charity that doesn't have the capability to do that, they would set up a flow-through fund for that purpose. Still technically falls under this umbrella, but we really haven't dug into those because they're come and go, as you would expect. Okay, so what's driving all this growth in DAFs? We're going to talk about this a couple times, first from the fund perspective here, and then we'll talk about a little bit in terms of what donors want in the moment. But at the macro level, what we know is that there's just greater awareness among individuals who have the means, that's affluent, high net worth households, who have the means to set up funds. It's just becoming more known, there's more heard about, we're talking about it. It's becoming something they're becoming aware of as a giving vehicle. Absolutely, part of that is due to this active participation that we know banks, financial advisors, and others are doing. They are out there talking about DAFs as an option for their clients. It's absolutely having an impact. But also, there's a lot of money in motion right now. We've been talking about the wealth transfer for a while, and it's real. It's here, it's happening. Both, I would say, in a couple real ways. Number one, we're seeing many bequests and that wealth transfer between generations. So people may be suddenly inheriting some funds that they're trying to determine what to do with. They know often they want to give some of it away, but they don't maybe know what to do right now, or just want to have some time to think about it. So DAFs are definitely becoming a key piece of that, but also a lot of liquidity events. In particular, we're seeing many baby boomers exiting the workforce, perhaps selling businesses, or getting a lot of stock options maturing. These particular donors are often looking to DAFs as well to help simplify and manage their giving. Because they are convenient to access, it's very easy to set up compared to a foundation, simple to understand, tax efficient. And as we're going to talk about in a minute, multi-generational is a really key driver of this. When it comes to donor advised funds, they're very different. It's a real landscape or a mosaic out there in terms of the options available to donors and the approaches that different DAF foundations use. So you'll have, for example, community foundations like the Vancouver Foundation here, which are longstanding organizations with a real history, particularly around those endowed funds in support of a particular community. We've seen the rise, obviously, of foundations attached to financial institutions like the Private Giving Foundation, one of the oldest in Canada, at least that we see. But there's a number too that are coming up with different models, the ones we call the independent foundations, which are looking to build perhaps relationships maybe with smaller donors, like GiveWise or GivePact, or on the other end of the spectrum, Charitable Impact, which is a very large number of funds with relatively small amounts, as you can see, serving more, as I would say, more that kind of charitable savings account idea for more people. But when it comes to where the money is, so if you're thinking, where's all this money in terms of DAFs? One thing that surprises some people is how much of the actual assets are held within community foundations. So in Canada, what you're seeing in the red lines here is that 48%, as we estimate it, and I will stress this is an estimate based on our research and some degree of extrapolation where we couldn't find data, but we estimate just under half of all assets in Canada, at least in 2021, were held within community foundations. Much of that is endowed, obviously, and that's one of the reasons there's such substantive assets, is because only the income earned is being paid out on a year-to-year basis. The other half is roughly split for the most part between those independent DAF foundations and the ones that are aligned with financial institutions. Faith-based is another important sector. It's a little smaller. Some could argue, and in some reports or interpretations, you'll see that lumped in with the community foundation group. We broke it out as much as we could. Relatively small in terms of assets, but definitely much more significant in terms of number. And you're seeing that too with the financial institutions, whereas with the community foundations, a little bit of concentration of assets, again, because of that model primarily. This does exclude Charitable Impact just because their model is so different in many ways. We exclude them from the purposes, but remember that they're out there too. So in terms of the money going in and out, I'm just going to talk about DAFs by type. So as I mentioned earlier, there's 3 main types, but for the most part, we really focused on endowed funds versus those flow through and spend down. So think of them really as flexible funds. In terms of money in, even though there's a lot more assets sitting in endowed funds, the money going in is much more directed to those flow through or spend down funds, frankly, as you would expect. In terms of the grants coming out, same thing. We estimate that there's about 10,000 grants that were made from endowed funds in 2021, whereas there's just under 80,000 is the way I would interpret that, coming out of those flexible funds for that same year. And the money really correlates. As you can see, it was almost 800 million came out of those flexible funds. The granting rate is obviously very different, as you would expect with the 2 models. So an important thing whenever you see data about granting or flow rates, even in our report, you'll see them mushed together. Remember, there's the 2 models. It's really, I think, more appropriate as much as possible to look at them separately because they're very separate, different models, and we should have different expectations when we think about them. But definitely, again, granting rate is different, and the grant value is also different. The endowed funds on average have higher grants, again, as might be expected. Where do they go? Well, here's where Grant Connect came in, and thanks, I think, for the 3rd time to the Imagine Canada team. But because they have so much information about a certain number of donor advised funds, it's not every donor advised fund, but we look to what they had as a bit of a proxy, I would say, for the sector. And in terms of the data they did have available, when we crunched it by both value, by value, but maybe not quite by number, health comes out on top. Faith-based causes, close second, I would say, as our social services, followed by education. In terms of number, we definitely see more number of grants going to social service charities, but just slightly smaller average amounts, which actually really aligns with what we see in terms of donations in Canada, both in terms of this area of interest and the type of gifts. The only difference is, depending on when we crunch the data, faith-based causes are usually on top. What's interesting, we weren't really comparing against US data. I know that was one of the questions a couple people sent in advance. How do DAFs in Canada compare to US? One of the ways that we're notably different is that in the US, the proportion of grants from DAFs that go to the education sector is much higher. Now, why is that? There's probably some good reasons around that, including higher enrollment in private schools in the US, as well as the stronger culture of giving back to one's alma mater than we see in Canada. But that is one just little notable difference. What's the same, however, is when you look towards the bottom of the table, some of the other sectors, particularly, unfortunately, in my opinion, environmental and climate change, arts and culture, and international causes tend to get a little bit less, at least so far. Always opportunity. And that takes us to the next part, which is, okay, so what do we do as organizations to try and realize the opportunity that all these funds represent? So one of the things, first of all, when we think about DAF donors, and what I'm going to talk about here is based on all those focus groups and consultations and interviews that we did with people who are using DAFs. First and foremost, they are popular. We cannot deny this. What we know is that many of the donors are generally at or over 55. Many are at or near retirement. Again, they're experiencing some of that. Those events that we might have talked about, wealth events, whether it's bequests or retirement or selling businesses. That being said, these are high income individuals, but not the mega wealthy for the most part. And in fact, when we look at the growth, what we're seeing is that it is actually moving down through the income levels in Canada, whereas, 15 years ago, when they were really new in Canada, it was mostly pitched as an alternative to the people who might be setting up private foundations. Increasingly, this is being marketed or appealing to individuals who wouldn't actually be appropriate for a foundation. They just don't have that kind of funds, but they're maybe thinking about this as part of their overall financial planning. And this is where the term that we're starting to hear, and in fact came up in a lot of the consultations we did, of this idea of a DAF as a charitable savings account for individuals is starting to come up. Emerging trend that just starting to see is the idea of DAFs for corporate giving. And there's a couple flavors on this, either DAFs as a way to combine and amalgamate giving, perhaps by employees or maybe executives or partners to give as a group, or a trend of employee funds, almost the idea of like an RSP fund where you have a fund and your employer perhaps matches some of your contributions. An emerging trend in the US, where it's really just, I would say, in its infancy in Canada. We'll see if it kind of takes off or not. The other thing about DAF donors, very strategic, very focused on the future, at least when it comes to the usage of their funds. What they told us is that they really see these funds as being used for their strategic giving objectives. Sometimes to support larger projects, or maybe to provide a cushion, like it says there, for their pledge commitments. So in other words, they want to be sure that they have funds for things that they want to do, whether that is something they see coming up or something that they've already committed to, and they want to make sure they can fulfill those pledge payments regardless of what their income does, which is where that flow-through fund is really coming into play. Some donors also give those, actually, sorry, not some, most, it's important to know, of these donors are not just using their DAFs to give. They are also giving in other ways. And in particular, what they told us is that they see their DAF is for the big gifts, and smaller gifts, they still give directly on their credit card or cash or check, just like everyone else. And these are gifts to the same charity. So one of the things that really was an aha moment for me is understanding how many DAF donors you probably already have in your collective databases, because these are individuals who are making lots of different gifts. And then when they make a big gift is when they pull out the DAF, might be the way to think about it. What was not a driver, and this is a bit of a myth busting, if I can put it that way, was anonymity. The donors we talked to, granted, they were donors who are willing to talk to us. So I'm not saying this is every single donor, but by and large, anyone who talked to us, and we heard this backed up from many of the charity executives and some of those DAF Foundation executives too, this is not what they're talking about. This is not what's top of mind when they're setting up a fund. But that being said, they don't necessarily want to be public. So many of these donors and perhaps their advisors understand the degree of transparency that you have with a private foundation. It's not that private, actually. And they're saying, I don't know that I want that, but it's not that they want anonymity. What's also interesting is that these donors are really seeking connection and information with the causes they support. One of the key criticisms that they had about their funds is they felt that it was, in some cases, becoming a bit of a barrier between them and the causes they support. They felt like it was creating an artificial constraint. And they wanted that connection. They wanted that relationship. They also wanted to be able to get information about causes that need support, whether it was from their DAF organization. So for example, if they're a donor to a community foundation, one of the things they talked about was that they valued or they wanted was that information about, what are the needs in the community? Where can my money do the most good? Others were talking about how they wanted to work with other donors. Many of them said, I'm not big enough to fund really big initiatives by myself, but I love, or I would like to get together with others who maybe are interested in this, and we could together do something transformative in my community or in the sector I want to support. The other thing they want is they want their money to do good while it's invested. So they see this as really money that once donated should be doing good. They wanted to hear about, or they were hungry for, whether it was just an understanding that it was directed, invested ethically, or even used as an impact investment. Could it be used to help social finance, social capital for organizations that needed it while it was still invested? That was something that they're increasingly looking for. And when we've been talking about this with the DAF organizations, I think it's something we're going to see a little bit more of in the future. So one of the questions that came through loud and clear in the advanced questions for this webinar is, why do donors want to use DAFs? Well, there's a few reasons. And one of the ones that I think is really powerful and that we heard from all of them is this idea that they want to simplify their giving and enable more giving in the future. So back to those wealth events, many of these donors are funding their DAFs from securities or other types of investments. And in particular, with respect to the securities, what was interesting is some of the really savvy donors, and many of these are savvy donors, were saying, giving securities is complicated and it takes time. And they didn't necessarily want to, A, work through that process with all of the charities that they support, or frankly, put that burden on those charities. One of the women I spoke to said, I support a lot of grassroots social service charities. I don't want to force them to have to manage my securities and go through that process when I can just send them a check. And I thought that was really important to hear, because it was her really trying to help charities in more ways than just through the money. A key value that they told us too is I get one tax receipt. I don't have to keep track of all my tax receipts. I just make one big contribution. So again, back to that chart, this is definitely what they're doing. They make one big, huge lump sum, and then they get the time, the energy, and the focus to give to charities over time. The accumulation in the meantime, I would say that's a bonus that they really like, because it means while they're working through that process, there's maybe even more to give. Family legacy was also really important to many donors, especially those that are either going into the endowed space or thinking about that account as something that's going to last a long time. They were very strategically looking to involve younger generations. They were saying to us, I'm setting up this fund, which I've been entrusted with these monies, but I want my kids to go on and think about the causes they support over time and be able to participate in this philanthropy that is so important to us as a family. Few other reasons. For sure, some donors are using a DAF as a step on the path to a private foundation. So again, back to those flow-through DAFs that are maybe more temporary. Some donors said that they used a fund as a first step while they were going through the process of setting up their foundation, because it does take time, but maybe they were having that wealth event and frankly, the financial need as they saw it to give the funds now as opposed to further on to be able to, whether it was, clean up an estate or, manage the sale of a company, whatever it was. Definitely that happens. So be aware when you see some of those huge donations, either in or out, sometimes that's really what's happening there, is it's a private foundation, the birth process, so to speak. Some donors, like I said earlier, are using DAFs to stay private. But I think, again, what's really important here is privacy, not the same as anonymity. So what those donors who are in that category told us is, I still want to have a relationship with the charity I support. I just don't want all the other charities to ask me for money. Finally, some donors very much value the services and the efficiency of DAFs. They're building relationships with their advisors at the foundations or with their financial advisors, and those donor services, whether it is some of that group engagement opportunity, that opportunity to learn about the needs in the community. This is what they're looking for, and they're seeing themselves as really becoming part of a community of donors that are having impact. So it's about more than just them that they're looking for. Okay, so what does that mean for those of us on the charitable side? And most of the time I'm a charitable consultant, so this is where I live, is thinking about how do we really help charities realize more funds to help them do more work? Well, the first thing that I always advise my clients is whatever you do, make sure that you are welcoming and encouraging to these particular donors and their potential grants. And there's a lot of basics that we're just not always doing as a sector, I would say, including it as an option when you give people options in terms of how to give. So your annual giving appeal letter, are you including a checkbox that says, I will make this donation through my DAF? Are you including it on your website? I can assure you many organizations aren't. I would say start there. Just get it up there. Just like we talk about all the variety of plan giving vehicles, we've become very good at talking about bequests and gifts of life insurance. More people have the potential now to give through their DAF than do through those channels. So make sure that you're open to them. One of the other things that we heard from donors is a bit of regret that they don't, if they want to give through their DAF and give a larger gift, they can't participate in some giving challenges. So an example one alum said is a giving day. Their university does a day of giving, and DAFs aren't counted in that day of giving. And so they feel regret that they're not included with their classmates and being seen as a supporter. I think this is probably an easy one we can fix as a sector. And remember that you're likely to see a bigger gift coming through a DAF than you are on somebody's credit card. So it really would help us to do that. We can also highlight DAF donors and stories and testimonials, because at the end of the day, it's about the donor. The DAF is just the giving vehicle. And so as much as possible, just like we talk about people who make monthly contributions or people who have expectancies in their will, we should be talking about people who are being strategic with their DAF to fund projects at our organization. And we also should be acknowledging and recognizing as you do for other gifts, not receiving, but acknowledging and recognizing, absolutely. So when it comes to when these gifts come in, one of the things I always say is keep your eyes out. Because one of the things that I see, and I know way back in my university days, but we realized is not all the information was going into the database. So while it might be coming in the mail, sometimes the fundraiser wasn't realizing there was information about the actual donor as opposed to the check writer that wasn't always coming through. So make sure your entire process from mail or online, whatever it is set up to capture and get that information through to the people who need it. That being said, in your database, you always have to hard credit the foundation, yes, but you should be soft crediting the individuals involved wherever and whenever possible. And you need to make sure that it's showing the full picture of giving history for those donors. Because remember, like I said earlier, they are often giving to the same cause in multiple ways. They may be making their annual gift out of their DAF, but they might be participating in your event. They might be buying lottery tickets. They might be doing other things. You want to be able to see all of that at once. Whenever you do get a new DAF donor, research obviously and try to build that relationship as much as possible, because there is higher giving potential here, obviously. Follow up. So there was a lot of questions about how do I follow up? If you get the information, so if you're sure you're capturing as much as you can, for all those where you do get some information, please do send acknowledgements, thank you letters, all of that you would with a receipt. You just don't send the receipt. If you don't get an address or a name, do follow up with the granting foundation. You can send things to be passed along, and they will do that. At least all the ones we spoke to assured us they do that. One of their key complaints, though, was getting the thank you letter addressed to them. So Joanne Ryan at the Private Giving Foundation said, I don't want to get one more thank you letter addressed to Ms. Joanne Ryan. She said, if you don't have anything, please send it back and say, as much as you can, please pass this on to the donor involved. And she said, my team will pass it on, I assure you. And hopefully that will then help you build a relationship with the donor and the family. I want to stress that. Go back to that family giving piece. That's what's important to many of these donors. So if you get some information, for example, that Celeste Bannon Waterman from the Waterman Family Fund made a donation, as much as possible, remember that's the Waterman Family Fund. Thank the Waterman family. The individual might be the key contact, but be sure to include that family acknowledgement, because those younger generations are often the ones who are going to be making the decisions in the future. Similarly, build community as much as you can. So whether that is local or influential DAF advisors in your space, if you're a national organization, try to share information about your cause. This is not about lobbying the individuals at the DAF foundations. They are not going to fundraise on your behalf, but what you do want is you want to make sure if a donor is saying, what's the right charity if I want to make an impact on women's health, for example, you want them to know if you're doing a lot of work in that space, that you're there as one of the options that they can then put forward. You also want to make sure that you're considered or you're part of the conversation if they're working to do some convening. Increasingly, some DAF foundations, particularly community foundations, are really stepping into that role of convener on certain causes that impact their community. You want to be seen to be part of the solution on that cause if that happens. Again, include and address the spouse and family as much as possible whenever you communicate. Remember, there's a community on the other side of that fund that donor is seeking to build. Recognize that wish and be part of that solution for them. And also, wherever you can, try and think about those projects or opportunities that those DAF donors can join in with others, whether that's just within your organization, if there's projects that you think are suitable to, you know, donors that may have those funds and higher levels to give, or with other organizations. So if there's other, you know, charities that you work with, maybe there's something you can do there to help these donors have that community that they're seeking. So all of this has been very nice, but for sure, there's room for greater transparency when it comes to donor advised funds. And we couldn't not talk about this because there is such a lack of reliable data. The fact that we had to go to a survey and so many data sources to try and gather information about what's going on with donor advised funds in Canada just speaks to that, in my opinion. There definitely needs to be some greater fund level reporting and clarity around disbursement rates. So back to my point about the very different models of endowed DAFs versus other types, we need to, you know, be thinking with a little bit more sophistication around what we're asking of organizations to share. On that note, one of the calls to action in the report is that we believe the DAF community, so that's organizations that hold and sponsor DAFs, should be working on developing standards and code of conduct. There's been a lot of conversation around this, and I think we're starting to see the needle move a little bit, but this is something that I don't think they should wait for government, because what we generally see, and in fact, I know there's a lot of questions around Bill C-32, is that when government comes in, it isn't always what we want. And right now, it looks like Bill C-32 may bring some changes around that trust level reporting that will capture DAFs, but it's a lot of actual overhead compared to what we, in terms of the report authors, think is needed. And it also captures other types of endowed funds, like awards at universities and things like that, that isn't really, I think, what was intended with that act. So we'll see how it plays out. And that's about as far as I'm going to go on it, because I am not a legal expert, but there's definitely some issues here around increased transparency required. And I will say too, like I said earlier, many of these organizations are doing more voluntary reporting than they have to. They are sharing donor names. They're talking about or publishing the number of DAFs they have, where those grants are going, which is fantastic. I think we could definitely up the game for all, so that we as a society have more confidence that the money that's going in to these funds is in fact doing good that it should. And one of the things, again, that we have to talk when we look at Canada, because this report was just focused on Canada, but in a couple spots we compared against other countries. Donor advised funds in Canada are relatively new, and the sector really is, I would say, in its infancy. It's only now really starting to grow up and to have enough funds that we're starting to see, for example, many of those endowed funds start to realize their full disbursement quotas. We're starting to see some of those flow-through funds, you know, really kind of those savings accounts that people have built up now starting to spend out. But still, when we look at a couple different metrics that experts in this space use to assess how much money is coming out compared to how much is going in, there's two that we looked at. The granting rate is the proportion of assets that come out on an annual basis. The flow rate is the proportion of donations in, or sorry, grants out compared to donations in. Whatever it is, we are lower than both the UK and the US. The US in particular is a much more mature market with respect to DAFs than we are in Canada. So we are hoping that we will begin to approach, maybe not the same model, but that we will approach higher disbursement rates, whether it's granting or flow rate that you look at. And in particular, as you can see here in the teal highlighted box, if we were at 15%, which is still just a hair lower than either the UK or the US in 2019, that would have been an additional $500 million that would have gone to charities. I think this is a reasonable goal for us to be shooting for as a sector and as a society. And so again, one of the calls to action is that we need to be thinking about how to increase that level, not through cutting donations in, but by making sure those grants out are happening at levels we expect. On that, what we know is that this is going to continue to grow. Taking the long-term view, in 2011, the approximate amount held in DAFs in Canada was 1.4 billion. Our study said in 2021, we believe it was about 8.5 billion. And just based on the trajectory, by 2025, we're estimating it's going to be 12.5 billion. So there is a lot of money in donor advised funds, definitely much of that endowed, but there's a number, there's a great potential to have huge impact for the sector, and frankly, to provide on an annual basis a really good, sustainable, and reliable source of funds. Our job on this side, speaking as charities, is now to make sure that we work with those donors and build those relationships to, as much as we can, realize the impact. Okay, on that, I'm going to pause, and I'm sure there's like a huge number of questions that I haven't been looking at. So I'm going to stop sharing and I'm going to start looking at the questions. And I know Meredith and Stephanie are standing by ready to ask some for me.
Yes, we've got lots of questions here. Keep them coming. We will get to as many as we can. But we got some questions around finding out which of your donors have DAFs. So we got Lisa asked, is there a simple way to know if any of our existing donors have DAFs, aside from outright asking people one by one?
No, not to my knowledge. That being said, you know, any resources you can get your hands on, like good old prospect research. Hi, Mary McLeod, Mary McLeod from UG. Nice to see you, researcher. You know, as much as possible, if you're in a community like University of Guelph, where Mary and I used to work together some years ago, you'd want to be looking at, you know, the Guelph Community Foundation and see who's got some donor advised funds there, and then go have a look and see if they're in your database. But that's kind of manual and time consuming. Definitely you'll want to have access to Grant Connect so that you can go and look at the donor advised funds that they do have on file. And again, use that as a search repository. But no, other than that, like for example, the Private Giving Foundation does not publish and probably won't, just because it's part of their value proposition ever, the names of everyone who has a fund there. So this is really about building relationships with donors on a one-by-one basis and hopefully finding out that way that they have a fund. Sorry.
Okay, great. So we got a question from Anne, and she's asking if you can point to an example of a charity that has done a good job of including the DAF option on their website, if you know of one.
Oh, that's a good question, Anne.
It is a great question.
Off the top of my head, no. You know what? If I think of one during this call, think about it. If I think of anything afterwards, I will share it. If anybody is on the call and has a great example, please pop it into the chat. I will say, the one thing I'll say that I've seen is great is in the US, there's a new button that's being promoted by some charities and DAF foundations for that giving challenge piece I addressed, where you can have, just like you have a button, say, give through my credit card, there's a button that says, I'll make a pledge through my DAF, and it quickly captures some information in a nice little tool. I've seen that used. I'll see if I can track it down for after. But no, I wouldn't say there's any charities I've seen who I think are doing a perfect job. I also haven't audited anybody for it, so don't know.
Okay. Yeah, no, that's great. And if you find that link and want to shoot it over, we can include it in the follow-up email. Okay, so we got a question from Ashley. How do you approach the people advising the donors, and what is the best way to approach as they may get many inquiries?
Yeah, great question. So I'm going to separate the answer into two categories of advisors. One is the advisors within the foundations, whether community or financial or whatever. Approach them in an information sharing perspective. You just want to be on their radar screen as much as possible, and you want to do that as politely and collegially as you can. Don't, like I said earlier, don't ask them to be your fundraisers. That will not go over well because they got a lot of, yeah, you're right, they got approached by a lot of people. Approach in at I'm trying to help you fashion. With financial advisors, as much as possible, similarly, but you can be a bit more, I would say, forward in the sense of they're more likely to be advising particular donors about great causes. And you can, probably try and build a bit more of a personal relationship, just as you would, the classic advice for trying to build bequests is to build relationships with financial advisors. It's the same conversation. You just want to be talking about other strategic giving vehicles like DAFs.
Great. We got a question from Terry. I'm not sure if you have any insight into this list, but Terry's wondering, you know, if you know anything about what a fund manager charges in fees.
Oh yeah, in terms of fees for donor advised funds, it varies, but in general, we see it tends to be around 1 to 2%, depending on the details and the size of the investment and that sort of thing. Some of the banks, one of their value proposition is that they say they have much lower fees than you could get if you're, you know, investing it yourself. Because they're trying to keep all the business in-house. So that is true, they do have lower fees, but it's a little tricky to find that information, absolutely.
Hey, we got a question from Donna asking if you can suggest a good link that explains DAFs to potential DAF donors. Most that she has seen are from a specific DAF holding organization, and it would be nice to have a general link.
That's a good question. The best overview I've actually seen, and I wish I'd seen it before we wrote the report, is there's a super great schematic in the US, Giving USA. It's a bit of a consortium of other fundraising consulting companies in the US. They did a donor advised fund report on the US in 2021. They have one great visual. It's better than ours, I'm so jealous. Anyways, but in terms of a site, I don't actually know of one, because you're right, Donna, it tends to be proprietary. Again, if I think of one, I'll send it along after.
Great, sounds good. We got a question from Maria asking, how do you know when to provide DAFs as an option to a prospective donor?
I would say at this point, you just include it in your list of giving options, just like everywhere else. So, you know, like I said, on your buck slip, where if you're going to include credit card check, you know, call me, or, you know, I'll make a bequest. I'd like information about that, include it in there. Same for your website. You know, we talk about all the different ways you can, you know, support us, include it there. It's not a bad thing, I would say. You know, you don't want to go down the road of having a complicated discussion with the donor if you don't have to, but it's not a bad idea if you're talking to a donor about a larger gift, is to ask, you know, and would you be funding this through a donor advised fund, especially when it comes to a pledge? That might help you find out who's using those.
Okay, great. We got a question here that is more of a general question, but someone's asking, why are DAFs helpful for nonprofits versus other giving options?
Why are they helpful for nonprofits? I think it's the point around not having to manage the complexity of some of the gifts. So for those donors that have complex gifts, again, you know, dealing with large gifts of securities, it is easier for us to deal with the check than having to manage, you know, that sale of the stock or security and, you know, dealing with the donor's broker. Absolutely. Otherwise, it's kind of neutral. I think in the big picture, the benefit is if you've got a donor who's got a DAF and, you know, you're getting a pledge from them, you probably have more confidence that that pledge payment is going to come through all the way, because you know they've got some resources. Bigger picture, it's money that's been set aside for charitable purposes only. So for the sector overall, it's good in the long run, as long as the disbursement rate is where we.
Great.
Yeah, absolutely. Donna just said when charitable giving tanks, DAFs are still there because donors can't take out. And it reminded me, thanks, Donna, during the first start of the pandemic, there was a big movement called Half My DAF, which was DAF donors trying to get other DAF donors to give half of their DAF because they knew donors wouldn't be giving and charities needed support. I don't think they hit half, but a lot of donors gave a lot of money that had already been set aside. You're absolutely right, can't go anywhere else. You might as well give it to a charity when the need is there.
Okay. Do the organizations that manage DAFs want anything from charities, or should charities just focus on making it easier for individual donors who have DAFs to donate using their DAF?
The one thing I heard is that they want charities to follow up with the original donor, not them. That is absolutely what they want. They know their donors want that connection and engagement. Again, in most cases, there's always some people who want to give anonymously, but where it's not anonymous, they really want that, because that's the number one complaint they hear is you're getting in the way of me building a relationship with the charity because the charity thinks I want anonymity and I don't.
Got it. Okay, that makes sense. We got another question from Terry. So can a DAF give to any international project, or are there requirements for this to be considered an allowable gift?
It's the same regulations that are on any charity in terms of funding a qualified donee. So I'm not going to spout those are off the top of my head, but it's exactly the same if you look at the CRA regulations. So wherever Canadian Foundation or charity can give funds to is the same for a DAF. And I'm just going to give a shout out because Allison, hi Allison, former colleague, thanks. She's posted an example of Doctors Without Borders donor advised fund, and I totally trust Allison. If she says it's a good example, it's a great one. Thanks, Allison. Thanks, Alex, for the qualified donee link.
Perfect. Yeah, we can include all of these links in the follow-up email as well. So keep them coming if more people have links. So we got a question from, another question from Lisa. As these become more common, do you foresee a need for charities to change or update gift acceptance policies, or can most policies absorb this new vehicle without need for change?
Yes, thank you for that. And I was thinking about that earlier, I forgot to mention, yes, gift acceptance policies probably need updated too. We get into such esoterica on some gift acceptance policies, and then we don't cover this. We do absolutely need to talk about about donor advised funds, but I also say don't get too complicated. Just make sure you accept it, it's there, and that you clarify who you're going to recognize, which is not the DAF Foundation, it is the advising donor.
Okay, great. We have a few minutes left, so I think we can get to a couple more. We got some questions from smaller charities. So we have somebody asking, how can smaller charities with limited fundraising staff and budgets take part in donor advised funds? And where would you recommend they get started?
So everybody can take part in donor advised funds. And I'm going to answer Allison's question that just popped in the chat at the same time. And sorry, anybody whose question I didn't answer, Allison, I saw it, as Meredith was saying, it's the same answer. Yes, this is a giving vehicle for individuals. And so this is just about building individual donor relationships. And then some donors are going to happen to give those funds through donor advised funds. Other than the passive stuff that we've talked about, i.e. get on your website, get on your buck slip, just encourage those gifts. For the most part, this is just about building donor relationships. And so you're absolutely right, Allison, this is a payment method for major donors or mid-level donors increasingly. It's not like a foundation model. It's not a separate piece.
Okay, and then I think we have time for one more before we kind of close it out, but we got a question from Kalita or Coletta, I apologize if I'm pronouncing that wrong, but she's asking, we receive gifts in a multitude of different ways and they all come in varying amounts of information. How would you recommend that we know if a donation is coming from a DAF versus a private foundation? Good
question. I would, and I'm not shilling for Grant Connect, but I would get Grant Connect. And because it's really quite reasonable way to search through foundations and see if that's listed there. And that's how you'll know if it's a foundation, frankly, because then you get all the information. Watch for some words. I mean, anything that says fund is probably a fund. It's getting a little tricky with the word foundation in that now we're starting to see that be used for some donor advised funds. But yeah, as much as possible, just kind of look for those keywords, I would say, that tell you it's maybe not as big as a foundation, and just do your search. There's not that many foundations in Canada, believe me, as you might think. So they are searchable.
Okay, great. And then I lied, we're going to sneak in one more because we just got a question from Emily. So based on your research, did you see that one? Okay.
I do, and I was hoping to answer that one. So thank you.
Perfect.
Yeah,
let me read it out here just so everybody kind of knows what we're talking about here. But Emily's question is, based on your research, how flexible are DAF donors when a charity needs to parse out a portion of their gift towards admin cost?
Yeah, great question, Emily. I would say just as amenable as other major donors. So it's a conversation you have to have. In general, I would say these are pretty savvy and charity-oriented donors. So they're open to this conversation, but not all of them are. So really, you have to talk to them and say, just like you would with a major donor, we'd like to reserve 5% of your gift for administration or whatever your kind of amount is that you're trying to do. But definitely open the door. Do not assume they're not open to it, is what I would say. if anything, you're going to have slightly better success than with most owners.
Okay, amazing. Thank you everybody for all of your questions. Such great engagement on this call, which means that this is a hot topic right now. So we're going to wrap up the session for today, but thank you so much again, Celeste, for being with us today. Before we go, I just want to let everyone know that there will be a very short survey that will pop up right after the session. It should take you only about 20 seconds, and we would greatly appreciate hearing your feedback. We have our next Key Labs webinar coming up on September 21st called Nonprofit Email Marketing 102, Advanced Strategies for Engaging Supporters. And Stephanie will be putting a link to register for that webinar in the chat. So thank you again, everyone. Thank you again, Celeste and Catherine and everyone from Imagine Canada. And we will see you at the next webinar.
Thanks, everybody.